Hey, good morning. Happy Monday. Let's do a headline update. In the meantime, I'll reload my coffee and we'll begin in a moment. Let's go. Fed's hamac, elevated services inflation is a concern. UK mortgage approvals decline, consumer credit remains unchanged.
Fed's hammock. Inflation is too high and the trend is in the wrong direction. Oil prices dropped 2% on expected global supply growth. Yen outperforming on BOJ, Scotiabank. Mexico jobless rate above expectations, 2.8% in August. Actual, 2.9%.
Mexico jobless rate SAA unchanged at 2.6% in August.
Crypto today, Bitcoin bulls eye $116,000 as Ethereum and XRP steady. Pi network price forecast. PI declines as 130 Skitsmo tokens prepare for October unlock.
Pound. Chancellor Reeves reinforces commitment to fiscal rule. Scotiabank.
Yeah, boy. Yeah. Right. Running over. G'day, mate. How are ya? You guys ready to go? Oh, yeah. All right. Well, welcome. All right, everything's getting messed up today. Oh, one of my lights is off. Maybe that's the issue. Uh, no, that's not quite right, huh? Hey, welcome to my office. My name is Wayne. This is Forex.Today, the YouTube community of more than 21,000 Forex traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone, your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. All right, cool. So here we are. Hope you had a nice weekend. We'll go through our routine here on YouTube. We'll focus on trading patterns. I've already spent almost an hour with TRADARS subscribers going through the fundamentals and all that kind of stuff. So let's just do sort of an overview of the market situation. And then we can get into technical trading patterns. The assumption already when it comes to the macro is that you have already downloaded and reviewed the Commitment of Traders report from the CFTC. That came out Friday at 3:30. And so TRADARS covered it with Meta, I think at 5. And then I covered it this morning, which is part of my Monday routine They look at the capital stock and flow of institutional investors. Yeah, so the assumption is you've already done it. If not, like, well, good luck. Good luck trading when you don't know. But taking a look at how the market is moving, yields are going the wrong way. Kind of a change in the attitude toward how many Fed cuts there are. Last week, we saw oil at our 65, 66 level of resistance, and we talked about, the big short. And, oh, look at this. It's down 2%. Gold is at all-time highs. Stock market, uh-oh. Maybe some profit taking at the end of the quarter. Maybe. Bitcoin on Saturday was 108,000. Now it's 112,000. Coulda, shoulda, woulda. So a little bit of risk on and risk off going on at the same time. And of course, things are mixed. Things are messy. Things are flattening. Things are mediocre. But the markets are moving. Yeah. Platinum up 15% this week. What? Look at silver. Silver's a beast. Okay. Here's that COT report. Isn't that nice? Gorgeous. Gorgeous. But let's do our technical trading patterns. So today, my friend, let's go back. Today, and I'll zoom in. Okay, I'll zoom in. Today, we're only going to do euro dollar on the YouTube live stream. Of course, users of the TRADARS analytical platform have access to all of the currencies. We'll take a look at Bitcoin. We'll look at the 10-year T-note, but we're not going to do Meta or Google or whatever. We are going to look at gold, not silver, not WTI Brent, but we could. We're going to look at just the S&P 500. If you could turn on NASI and Dow. Oh, you're Australian, you could turn on ASX. You're European, you could do DAX or FTSE. Okay, but anyways, we're just going to do there. I'm not going to do big moves. I'm not going to do consecutive candles. I'm not going to do key levels. I'm going to do Fibonacci, which is reversal patterns, usually in the form of like Gartley type patterns. And chart patterns, which are usually up, down, or sideways patterns. So that's all I care. Oh, okay. And so this is where we go to that euro dollar. And, and we get this. Cool. Daily, SpaghettiOs. Okay, there's a threat to bullishness. So the pattern is bullish, but it's under threat. So strength. Remember, in the description below the video, there's a download on how to trade all this stuff. And we use a SWOT analysis: strength, weakness, opportunity, threat, internal, external. So this is the internal shows strength. The external, the opportunity or threat, is that this is a threat to those bulls. Is it going to happen? That's not what this says. This doesn't say short. It says this is bullish with a threat. If it's going to go up, you want to buy it around this red line. So you got to be very cautious where you are. So you open it up on your chart and you want to look for some bullish. And this is kind of saying the same thing. Zoom in a little bit. Okay. If we have a sustained break of this red line, it is no longer bullish. That's all it says. You need to know how to read. Bitcoin. You guys ready with the Bitcoin? Ready? Bitcoin up, down, or sideways? Let's go. Bitcoin 4-hour up. Okay. Bullish with an opportunity that came out 12 hours ago when we're at 109, actually 1010. Cool. Good to know. But, okay, that's a 4-hour. On the daily, it's been having some troubles. So on a daily, it's still bearish. On a daily. On the daily, it has not reversed. If you are a bear, trade 1 and trade 2 live here. So even if you're a bull, that matters. Because what if we got to, if we're actually going to go to 119, that's way the heck up here. So that would be a breakout. So if we're going to do this, we got to get through 2 challenges. Okay, 2 challenges. So this is an opportunity for bears, this zone that we're in right now. Or if bulls break it on a 4-hour, then we're going to get this on the daily. Something like that. You know what I'm talking about? Yeah, so you have to know where you are on the map, not just that you're a bull or a bear. Oh, speaking of you. There we go. Oh, nope. 10-year T. Why do we care about 10-year T note? Well, it's the flow of capital. Okay? The flow of capital. Well, is it into the stock market? Are they locking in yields? Are they getting out? Like, we have to flow all this, right? All right. Well, on the long term, we have seen buyers of the 10-year T note. Okay. We've been doing this pattern for a bit. Now, it looks like that might be under threat. Now, if we're going up, which we have been, then yields are falling, and that's risk on. Well, risk or yields have been rising over the last week or so since, the, the, the reaction to the Fed meeting. And in many ways, that's not cool. That's risk off, not risk on, risk off. The pattern is still intact, but definitely under threat, don't you think? Like the pattern has been bullish, but if we have a sustained break that looks like this, then oh no, that's risk off. And then under correlation, you should know how to trade that. So what does that mean for the stock market? So that's a threat. Now on the 4-hour chart, we can see that bearishness that we've been in. So this is what we're talking about. That the pink arrow is what I just drew here on the left. And so now we're like, well, maybe it's going to try to make a break up. And if it's a sustained move, we'll continue up, but just on a flatter slope. And this will change. Oops. This will change here. We'll work with to something more like that. Okay. But we're not quite there yet, but it's possibility, right? So this is weakness with the threat, and this is strength with the threat. So it's very inconclusive on these time frames. But what I'm hoping for, which the market doesn't care about, I would like to see this happen, and then we get into this move. And yes, it's bullish. It's slightly bullish. And there'd be a slight move in the stock market, a slight move in some other things like dollar weakness or strength, but at least it would be directional. But green arrow, red arrow, well, them are the facts. So don't just trade like it's another boring day and you're like, I'm going to do what I do every day. Look at what's happening and make some decisions based on facts. We call that veritas, the truth through knowledge. Do you have to be the first one in the trade? Really? You have to be the first one in. All right. All right. So what's going on here with gold? Long-term strength with an opportunity on a short run. Strength with an opportunity. So what we're looking for here is up, up, up. Cool. Love it. You know why I love it? Because I already own it. I already own it. Now, does that mean I'm going to make a ton of money? No. What it means is the coast is clear. Don't freak out yet. Yes, I don't like the little pullback we've had in the last 15, 20 minutes. Yes, it's fine. But I'm looking at the support trend line. I'm looking at the moving average. I'm looking at the longer stuff. And this is just pattern recognition. But I've already looked at the fundamentals. I looked at the seasonals. I've made decisions, man. So this says, you know what? It's all good, bro. Focus on something worth your time. Now, if I wasn't in it, the way I'd read that is I could get in it, but did you see how close to an apex we were? So I would suspect a breakout of up or down as we approach that apex. And since the slope is so high, up maybe, down probably. So I need to formulate, if I want to be long, maybe I can wait for a dip. I don't know. At least you have the pattern. You can make decisions, huh? Put your big girl panties on and make a decision. And then the S&P. The lovely S&P. Well, it's, okay, there's no 15-minute. There's no 30-minute. There's no hourly. There's no 4 hour. There's only one pattern. The pattern could have been up, sideways or down, or reversal. So we were looking for all of them. So, no, it doesn't exist on any time frame. There's only one on one time frame, and it shows strength with a threat. Okay. Now, my job as a bull is to buy a dip. Okay. Possibility 1 is off that moving average. Possibility 2 is off of the slope line. Cool. Well, put it on your chart as maybe later. Maybe you want a time kicking it up the moving average, not on a daily. Drop into a 5-minute or 15-minute chart. Maybe you get a market open trade that runs into a swing trade that runs us to 7,000. If that fails, stop out for a small loss or at break even. Try again around 6,500. But the cool thing is, we might have an opportunity where it drops to 6,500. You buy it, and then it rallies up to 7,000. Well, for that, you have this. Then you want to look at price action. You want to look at more patterns on smaller time frames. Okay. You want to do your fib. You want to do your pivots. I would look for congruency of like dropping into 6,500 and then rally up from there. So I probably want weekly and monthly pivot points, but not for September. September's dead, bro. We ended September last week. We're already in October. And at TRADARS this morning, I shared the October outlook for the S&P 500 based on 20 years of data. But overlapped it with week by week analysis of September into October, and then where October can go, and then it was all quantitative. That sounds smart. Oh my God. You can't imagine how brilliant it is. It's crazy. Oh, but we do that all the time. We're not just beautiful, we're smart too. Thank you, TRADARS. Thank you, Traders Way. Hey, do you want to start making smart decisions regarding your trades, technically, fundamentally, and lining things up with market sentiment? Or do you like being an amateur? I like being random. I like guessing, Wayne. I love guessing. Well, we can change the way you trade. So it's jobs week. Don't forget about JOLTS. Don't forget about ADP. Don't forget about weekly claims. And then I'll be at FX Street to do non-farm payrolls. Well, smart is sexy, especially if you're rich. Right? He's so cute, though. Yeah. Look at this. Look how good this is. You see all this amazing stuff? This is going to get a lot better. This is going to get a lot better. So maybe sometime soon I'll have an amazing announcement that will take your trade planning beyond your wildest dreams using data, but not just data, data analytics, the analysis of the data far beyond what we're doing now, and significantly easier to understand. In fact, TRADARS can actually do the analysis for you. You don't have to wait to talk to Wayne. You don't have to stare at it and try to figure out, what does this COT mean? Yeah. So TRADARS is moved full AI. So now it doesn't just act as a repository and display of economic data. Oh, you can full on ask it questions. It'll full on tell you what it thinks. Can't wait to show it to you sometime soon. So that's traders.com. We execute through Traders Way. Trade through us, you'll get a spread rebate. If you like cheaper spreads, we'll do that for you. Peace on earth. May the pip